Wake up, buyer payer people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhodes on the Buy Here Pay Here morning show. Take it away, you two.
Happy Friday.
It's Friday.
It's Friday.
That's payday for a lot of folks in the U.S.
So it's a busy day too for most of our friends out there in Buy Here Pay Here land.
Right.
It's payday.
Yeah.
Payment day.
It'll be busy in the collection departments.
Yeah, absolutely. So we wanted to just real quick, good morning, David, to remind everybody that we started a month-long Management Monday topic on Monday. And if you haven't started writing down what it is that you do during the day, and starting on that journal, please start, because we're gonna take you through the next steps on Monday on our broadcast. So if you haven't had a chance to listen to that, please go back to Monday's broadcast and kind of see what it is that we're doing. And
you're thinking, wait, I thought this was a morning show. Like, I watch Good Morning America, and all they do is make me smile, and you guys give me homework.
Right? Gosh, darn it.
Right.
Well, I haven't had any complaints yet.
Yeah.
So,
Yeah. The difference is Good Morning America is just trying to make people happy. We're trying to make people better.
Happy.
And happy. Yeah. We can do that.
Have some fun along the way and do the stuff. And so really great week this week. And we've just had some really great client meetings and some incredible topics, and
one after
another. And every time we get done with a client meeting, it's like, oh goodness, let's write down an idea of what we can talk about on either the morning show or Tote the Note, and really start to unpack some of those things. And speaking of Tote the Note, those of you who have not listened to or haven't looked that up yet, Tote the Note is kind of like our 60 minutes. And so it's a little bit heavier, meatier topics. And just to let you guys, so we've got a bunch out there on YouTube. So subscribe to the YouTube channel so you get those first before they go into the syndicated stations. And if you like what you're hearing, then please like it as well. But this next week, we actually have 2 recordings that are going to be being done for Tote the Note. One of them with Brent Carmichael, and the topic will be why dealers fail.
Yep. Just Brent and I on that one. And we have, I have my own experience. He certainly got his. And so we will share some really good tips on how to avoid finding yourself in that place.
Yeah, that's going to be a really good one. And we've had a couple of things that have come up, things that we've observed in the last little bit that was like, oh, this would be a good thing to talk to everybody about. So that it's like, what are the pitfalls? What are the things you need to be watching out for so that you don't end up in the same track?
We saw a very graphic example of that yesterday with one of our clients. So I'll share that.
Yeah.
The podcast. We'll get into that.
And then we also have another one that we're recording next week with our friend Bill Elizondo he's a senior moderator at NIADA, and we're going to be talking about leasing.
Right.
This is not something that Jim and I have a lot of strength in because we don't do it really. It's, we're typically just straight buy here, pay here. But when we do the cash flow forecasting, that is something that we kind of will talk about if that's a model that you want to do. So
I actually have a good deal of experience with that from one side of it. There are pieces of that I wasn't exposed to, but I think you'll find that Bill and I can really talk about that from the standpoint of, we're not selling anybody on leasing. We're trying to make sure people understand what is the difference, why would it make why is it something I might want to consider?
Yeah.
Especially if I'm a new dealer, could it make sense for me? So we'll go through that and make sure dealers kind of understand the whole picture. That's kind of what I say is sometimes I hear about leasing that people don't tell the whole story. So I just want to make sure we tell the whole story about leasing and let people decide for themselves.
Yeah. Also wanted to let you all know that put on your calendar as well. Next Wednesday, we are going to have a couple on our White Hat Wednesday. We have a couple of guests that are coming to chat with us about capital, a little bit about capital.
Yeah.
And one of the guests is going to be from Butler Sanchez.
Okay.
So, and I believe
They're
it'll
confirmed.
be, yeah,
Okay,
she
good.
said she
Okay.
would do it. So,
Yeah, cool.
Amanda, you're in. Sorry, you don't,
Done,
you
you're
don't
in.
get out anymore.
Yeah.
And then also one of our clients who is opening his doors this month, but he is a CFO for another company. And so he really understands from a dealer's perspective what capital means. And so it's going to be it'll be a great episode next Wednesday for White Hat Wednesday. And we may end up doing a tote the note from that if there's a lot of meat that we want to unpack from that. But we've invited them to come and do that, and they both agreed.
So Brent is more than just a CFO. This is not Brent Carmichael. We have another client named Brent, and this gentleman is a CFO of multiple companies. He's a former CFO, with some large companies, and now he owns about 3 companies, and we're helping him get in the buy here, pay here business. But he's going to talk about a lot of the stuff that he's experienced in terms of pricing capital as he's kind of started his own dealership.
Because that's one of the things that we've had to work with him is making some introductions and getting him talking to different capital providers. And it's like, what's your perspective? Not just as a dealer, but as someone who understands accounting and all of that kind of stuff.
Quickly, he brings his own capital, but we could do in the calculations that he's got a bit of a gap before he's going to be eligible for a line of credit. So we needed a way to bridge him from his own money to ultimately a line of credit. So it's been an interesting endeavor as we've gone through that.
So a lot of rich content next week. Put it on your calendars. Make sure that you're listening. The whole everything goes on YouTube first after the live broadcast, and then within 24 hours, usually we'll have them on the syndicated
Is there somebody
channels.
listening to this broadcast right now that hasn't subscribed to YouTube?
Hasn't subscribed to our YouTube
I'm
channel? I don't know.
Don't be surprised if Michelle's knocking on your door.
Right.
You know?
I mean, yeah, exactly. Right. All of you that make comments, heck yeah, get out there and subscribe to the YouTube channel.
We're just diving into collections in a big way. So
yes,
I think
today.
Collections is obviously going to be something that people are going to want to find over there on YouTube, because we're going to, go in and talk about all the stuff.
And so we were discussing. We always discuss quite a bit. We talk about buy here, pay here. We live with each other. We talk about it, like all the time. But we were discussing, what do we want to talk about on Friday? And we took a walk a couple of days ago and just kind of started to go down actually it was Wednesday night after we did our last broadcast. And what do we want to talk about? And we both agree that we really wanted to be able to talk about some about collections, and so we've been batting back and forth. What about collections do we want to talk about? And there's so much there to talk about that we thought we start with the very fundamental, basic about collections,
and
that's a good place to start. Which fun? Yeah, exactly. So where to start?
Yeah, so I think maybe it's helpful. Like you've been there, Michelle, when we've had some conversations with clients lately, and there are a couple things to think about here right off the bat. One, first, for us to say what is successful collecting, we have to first decide, okay, what is the measure of success? How can we know when we're collecting successfully? Is that, because some people like to look at delinquency, other people lean on recency. So for me, let me just kind of start there. We've recorded plenty of stuff already on collection efficiency. I believe we should look hard at collection efficiency. It's important to remember that even if your collection efficiency is outstanding, you could still be experiencing some charge-offs. So I think the real ultimate measures for me would be that we're collecting efficiently, which means we're getting money in the bank, even if it comes a little bit late. We're having consistent results in our portfolio, and that shows up more on our rolling averages and our, we look at month over month, and then we look at rolling averages on our monthly performance. So maybe in a future episode, we'll talk about those specific metrics to look at on the monthly basis. But then the other measure of success would really be customers reaching maturity. Like, isn't that ultimately our goal in buy here, payers, to support the customer well enough that they can continue to make their payments, make it all the way to maturity, or buy another car near the end, trade for another car with us, at
Yeah.
the end. That to me would be the ultimate measure of collection success. And I get frustrated to go to the conferences like everybody else, and I hear people talking about, we have 11% charge off rate or 5% charge off rate or whatever. And I'm thinking, we need to know what numbers you're using. Like when we share numbers, I think we all ought to do a better job of making sure people know exactly what calculation we're talking about.
Do you think, and this is, I'm just off the cuff asking a question. Do you think that if we were to look at what are your numbers for loan completion or trade up?
Yeah, that's a good one. Yeah, I think it's obviously long range. And if I think about, and what I'm always trying to think about, especially here in the morning show, trying to think about people who are brand new in the business. So there may be 3 or 4 years before they have their first customers reaching maturity, And so when we think about, okay, so what can they do now to help with collection? So back to the conversation we just had with a dealer this week, we've got an established dealer who reached out to us for some help. We're starting into an engagement with them, and we're starting through this discovery period. And I often say to dealers, this particular dealer's got around 200 active accounts. Well, when we talk about collections, we kind of want to break it up into two things. There's collections on the existing portfolio, the 200 accounts roughly in their case that they have in their portfolio. So how we handle collections on those is one thing, trying to improve collections on those. But then,
and that's like where you're taking that batch of clients and you're siloing them. It's like this is the only thing we can really report on this now is just how this batch performs, right? Okay.
Yeah. And so, we remember, well, that means that we've got those customers are already contracted. They've already been closed. The underwriting's already long gone. They're in their contract. And so how we handle collections and how we would recommend handling collections on those is going to be different than how we would think about collections. So
Why?
for me, I didn't, what's that?
Why?
Well, because those customers have already been sort of trained, or they're already in their contract and they've already created some
You've already
pattern.
created your rails and your guidelines and that whole closing process and that whole thing. It's already been established, is what you're saying. Okay.
Yeah. And so typically when I try to help a dealer long term, because there's certain things you can do near term on collections, and certainly we get around talking to those. We probably won't get to it today, but certainly by the end of this month, we'll have a chance to talk about a lot of the very specific things you can do to improve collections now on your portfolio that's already active. Okay. We certainly want to help people in that way. I just always try to come to it from the idea that one of the best ways we help with collections is making sure that we do a better job on the front end of our business so that we're putting contracts in the portfolio starting today and tomorrow that have a better chance of success. They're structured well. They were closed properly. They were underwritten properly. So, I'll back up and say, so this also relates to collections. You've heard me say there are two types of structure. In my experience, there are two types of structure in buy here, pay here that really help us mitigate risk. If we can get these two things
Why
right.
do dealers fail? Sorry.
Yeah.
A lot of them can boil down to these two things.
Yeah. Well, it's, sort of. It's like one of the things that they're really two categories. It's like two things. I think if you can get these two formulas right, you mitigate a lot of the risk that is buy here, pay here. So one of those would be the structure of the financing to the customer. How well structured is that deal to accommodate or lend to success for the customer? Okay, so
there's a lot of pieces that are part of that.
There's a lot of things to know, and obviously there's great software. We're big fans of Neo as an underwriting solution, so that can be a great way to, help to make sure that we're consistent and setting the customer up for success. So that's number one. The other one's going to be the structure of the capitalization, the way that you fund your business and the way you introduce capital into your business, whether that's private money, external money, internal, whatever. How you introduce capital into your buy here, pay here space is really important. And so there's some structure there. And that's one of the ones we discovered in working through some modeling just yesterday, that is like very clear evidence of why it's so important to get that structure right. So we'll cover that later. But I'm just saying, when it comes to collections, as you know, we've been in these conversations with clients. We try to take a very holistic or global approach to all these things. So when we talk about collections, I'm saying, let's first talk about before we go in to start talking about how to improve the collections on the accounts we have now, can we first just try to stop any bleeding? Let's make our job easier. That's always what we're trying to do. Let's make our
Yeah.
job easier. And one of the ways we do that is let's stop putting hemorrhaging accounts in the portfolio. This is kind of an exaggerated way to say it, but I'm basically saying let's start with making sure we do a better job of putting the successful accounts in the new portfolio, make that job easier. Now, let's kind of follow that through. So that means, because we did a poll, and I meant to go find it. I didn't make time this morning to find a poll we did months ago asking dealers, do you agree that all of these things have an impact on collections? And I think the list would have included things like, do we agree that how we purchase cars, how we price cars, how we negotiate the terms, how we underwrite and close the deal, do we agree that those things have an impact on collections? You could also add how we support the customer after sale through warranty,
So
service
let's go through
contract.
those again,
Okay.
because it's I really like how you just put it. Is it's the car, how you buy the car,
Yeah, purchasing.
how you purchase a car, it affects collections. How you recondition that car probably affects collections.
Sure.
How you
Price it.
price the car affects collections. How you underwrite the deal affects collections, and how you close the deal
Some of
affects
these
collections.
things have near-term effects. Some of them have long-term effects, some both. But in that poll, and this is not just me talking, go back to the poll. I'll try to find it and share it in the comments from our thread here. But that poll basically confirmed that most every established dealer said, yeah, it absolutely affects collections, right? So that's why I'm saying, okay, so why don't we start there? Why don't we just try to make sure that, let's first stop any bleeding by making sure we're putting contracts in the portfolio that have a high chance of success. Now at the closing, we skipped, that's a really important piece, how we close and how we then transition the customer from being a car buyer today to an account next week and next month. How we make that transition is also super important.
Okay.
So communication is big, how we actually communicate at the point of closing, as far as how we map out expectations, and not just show them the document, have them sign, initial. We have to express it to them. And so we like a video. As you know, we've talked with many of our clients, we've introduced it, and we've even recorded some for clients where we record a video so that the message at closing is very consistent. And then they sign off in their documents. It says, yes, I watched the video entitled such and such. And so now you've got very good consistency in your closing.
And I just want to make a side note. When Jim had his own dealership, when he's managed dealerships, that there's two things that he always really, really stressed: being fair and being consistent.
Right.
It's like, you need to be consistent. Every single person that walks through this door needs to have the exact same kind of experience.
Yeah. And that ties very much to collections for me. So I've said it before, and we can say it again this morning in terms of collections, is that I made a decision in my business from the very get-go. Like I decided at the outset of my business that I was going to be fair and consistent, and that I wouldn't do anything for one customer that I wouldn't do for every customer. So that meant having, the discipline to do that. That doesn't mean we don't have our customers that we like or that we appreciate, because, they communicate better, whatever. But my objective was to be super consistent in how we did that. So same thing with the closing. Every customer hears exactly the same thing. And that way we're able to, know that it's not that the customer didn't hear it. It's not that we didn't communicate in the same way, which, we'll have to tackle another day, Michelle, this subject around, somebody messed up. And that's an article I wrote years ago. And it's kind of an approach that we brought to collections for all of my
that was
career.
actually, for those of you that are listening, it's like, we were going back and forth. Do we do something along that lines where it's a repo? I keep forgetting the word.
Oh, the postmortem.
Repo postmortems.
Yeah. And that's kind of at the end. Like that's kind of the report card thing when the deal is already done. And so what we chose to do is, let's talk about the early. Let's start at the beginning, which is really about, let's first talk about this whole idea of, how all these other things in our other departments affect collections. And that's not just prior to delivery. Those things can continue to affect us after delivery as well.
And I think just from the different consulting that we've done, we have really strongly advised that underwriting when things are being underwritten, that collections have a seat at the table.
Yeah. Yeah.
In the decision of underwriting. And so whether that be like your collections manager or someone from collections
Sure.
being part of that decision of underwriting.
You know, I'm glad you mentioned that, because that is as fundamental as it gets. Now, not every operation is big enough to do that, right? And listen, we get it when we're talking to buy here, pay here folks. Some of them are kind of more in the buy here, pay there category, where they're not the ones doing. They have somebody else doing the servicing, or some of these contracts end up getting sold and go to somebody else. We're really talking about, for the most part, we're talking about dealers who own and service their own paper. Okay, so they're going to have a chance to, from the point of origination, close it a certain way, hand it off to collections in a certain way, and have a real good impact. So that thing about having the collections department, you know, if you're a big enough operation and you can justify having a collections supervisor and some collectors, then we would like to have your collections supervisor at least be able to have a quick look in the underwriting. They're not the final decision maker, because if we leave it all to collections, they won't want to approve anybody.
And and you don't, and I think that there is some you open yourself up to some problems when you don't. This is my perspective. You open up yourself up to some problems when you leave underwriting to sales.
Yeah.
Because you can have certain gates and bumpers, but it's sales is going to have, unless they're really, really familiar with what happens in collections. Sales is about getting the deal closed.
Yeah.
And it's something that we would advise.
Yeah. And now is certainly, again, in the context of fundamentals, if you're thinking about somebody who's new to the business, there's just not much more fundamental about buy here, pay here, in that you think about, there's the sales side of this business. And maybe the best way to explain it is, years ago, I was called in on a really large buy here, pay here operation, one of the larger portfolios ever been asked to come in on. And they were having struggles at the point of sale. Like, they were having conflict between their sales department and their collections department. Sales department, these were new car stores. These guys were doing about 400 buy here, pay here deals a month. They were, funneling business out of new car franchise stores and doing a lot of numbers. And their sales managers were compensated in a way that they wanted those deals done. The sales managers did. Well, the collection team, or the underwriting team, who was partly represented by collections, was not approving some of the deals that they thought ought to, get bought. And so, again, this is internal. This is all in the same company. This is a related finance company. These are all part of the same team, same company, but there was a lot of conflict. And so I was brought in basically to be a referee. But I think you just can see there's a fundamental thing. And I remember saying this to a dealer in South Texas way back early in my career. And I said, there's just a fundamental, or an inherent struggle between sales and underwriting collections. And he said, boy, that's an understatement. So like, and it's very true that there's an inherent difference. Well, let's recognize that. Let's make sure that everything that we do in the approval and the closing, that we recognize that, look, our sales team, they're out there to do a job. They're to help try to find deals. And we love those people. They do an important job for us. It's just that if it was left to them, they would approve every deal, and we'd be left with a portfolio that's a mess. So you have to strike that balance. And like I said, if you let the collection team do it, they wouldn't want to approve anybody, because, so it's like, you have to strike that balance. And so that's why, typically dealer principal, general manager is kind of the final underwriter. You still need to have consistency in that. But by having the collection team at least have a seat at the table, they feel like their voice matters, and they can take better ownership of the contract. So that's really important. When we talk about fundamentals, it's really important for the collection team to feel like they've got some ownership. If I'm the collector and I'm running a team of 5 collectors, and every day we get, 10 new contracts put on us, but we had no say so in what and the deal is, maybe a little shaky, high payment to income ratio, weak job time, whatever it might look like. Can we see how that makes the team negative?
Yeah.
Can we see how that hurts morale? Is we're having all this paper dumped on us, and it's our job to go collect it. And we don't have a say so, and what kind of deals get done. And so we think, we don't think we should let collectors step in deny every deal, but we certainly think they should put their set of eyes, because they're going to have a different set of eyes. They're coming at it from purely a collection standpoint. They're the ones that are going to have a 4-year relationship with the customer, as an example. And so it's important to give them a chance to speak to that. So I'm glad you raised that thing, because that doesn't come up often
Well,
enough.
and it's I think that we forget sometimes it's easier. Let's just give the sales team all of the ability to approve, because it just is easier.
Sure.
But the sales team's relationship with the customer is a couple of hours.
Sure.
And yeah, I think that's a real important thing to remember, because it's comes down to that thing that we keep talking about, is like, do you want your customer to be successful or not?
Yeah.
And that's one of those really foundational things. Do you want your customer to be successful or not? Well, this is one way that you can help leverage success for your customer, is by allowing the collections team to have a set of eyes
Certainly
on deals that are coming across underwriting.
Yeah. So then you also think about this handoff, and when I say handoff, I'm really talking about the handoff from sales to collections. Ideally, maybe there's we've talked about the customer advocate concept and the idea of having someone on staff that's customer advocate. If they can do that, then that's wonderful. If not, we still are handing it off to collections. And so that whole handoff process, what does that look like? How does that transition go in terms of communication? Most of us are familiar with a welcome call, but I'm talking about something far more than a welcome call. It's about a real handoff, so that we can demonstrate to the customer in a very clear way that we said that we support you before you bought the car. We want to demonstrate that we still support you. We're going to explain in the first few weeks that you're, in our portfolio, kind of how this is going to work and how you can solve problems and so on. Because I often say that the reality of the buy here, pay here space, so many of the customers that we finance in buy here, pay here, they don't know how to solve their own problems. And so when something comes up, we know it because we work with it all the time. We know what kind of remedies and tools and solutions we have to solve problems, but because we haven't communicated to the customer, they don't know what happens. Like when they get behind, they don't know, and so we have to kind of communicate this stuff.
And it's kind of a really beautiful, not every dealership is going to have the ability to staff a lot of different positions right out of the gate. But this is a really beautiful, when you look at the passing between sales and collections, that there's a really great opportunity to weave in a customer success or a customer advocate right in there, to just kind of like bind the two that much more. But that's, that's another subject.
I'm not sure that'll come up again as we move deeper into collections. But, I think for today, what we wanted to kind of set the stage for collections and think, okay, before we start thinking about how to, because this kind of, the thing I raised about somebody messed up, it's like, okay, well, if I'm collecting on a customer whose PTI is set much too high, they were put in too much car and they've got a really long contract, or they, whatever. I mean, there can be a lot of things that happen over on the sales side that now are affecting this account, and it's a struggle to collect. And so we have to get in the habit. It's just nature of what we do. And we have to be, as business owners and managers, we have to be prepared to look in the mirror and say, did we play a role in that? Did we contribute to this struggle that's happening over on the collection side? And we hope the answer, you can be consistent in saying, no, we didn't create that. The customers, the customer's not managing their situation very well, but we need to know very clearly that we didn't contribute to that. We structured the deal in a smart way, gave the customer every chance to be successful. The other thing that does for us is now it allows us to hold the customer more accountable. How can I hold the customer accountable? And if I'm sitting at a 32%, payment to income, they're struggling, fuel prices are high. I mean, how am I just going to hammer on them? How am I going to hold them accountable to that? Now, if the deal is structured smart in a way that, now we've got a better chance to hold them accountable. So this is why all these things matter. And this is why I sometimes find myself answering questions with questions. Early on when we're meeting dealers, they'll ask questions about collections, and I have to say, well, how are we handling this? How are we handling this? This would be a factor in all of those things. But I think the key thing there is, and we can dig into that more when we touch on the subject of somebody messed up, is like, how do we make sure that we didn't contribute to that. And so that's why I always want to start on the sales and closing, underwriting, deal structure side. How are
And
we
we can talk
negotiating?
another time about how you purchase a car and how you recondition a car,
Yeah.
how you price a car. That could be a whole nother episode.
Absolutely.
But this is actually something that's applicable really quickly.
Yeah.
For any dealer out there, for, it's not the last 200 accounts. It's what's going to happen with the next 200 accounts.
Yeah.
And so starting to create those practices within your dealership that give collections an eye on what's happening with underwriting, a seat at the table.
Yep. And rest assured, if you can hang in here with us in August, we're going to cover all of it. We're going to go into the weeds on collections.
It's so funny because a lot of our colleagues and a lot of our colleagues and clients of, how can you do this 3 times a week?
Yeah.
Aren't you going to run out of things to talk about? It's no,
people are going to get tired of listening to us, but we're not going to run out of stuff to talk about.
We're not going to run out of stuff. So, all right. So tune in. I think we'll do another collections things probably next Friday,
right?
As well. And we just wanted to, remind you again, don't forget, assignment for Monday. Do your journal. Put on your calendar that you want to be listening all next week.
That's right. Just subscribe to the YouTube channel. You get a notification.
Yes, subscribe to the YouTube channel, and you get a notification. You get to see all these things, even the Tote the Note broadcast, or that goes there first before it goes through a lot of the different pieces to get it onto the syndicated stations.
Right.
And one last thing. If anybody in the state of Hawaii is listening to us right now.
Where are you, Hawaii?
Yeah. If anybody in the state of Hawaii is listening to us right now, that belongs to the state association or a dealer that needs help. We can give you a great deal.
honey, it's not just listeners in Hawaii. It's our listeners who know people in Hawaii.
There are listeners who know people in Hawaii. Yeah.
We're looking forward to an extended consulting visit in Hawaii one day soon. And so let's start spreading
we're putting it out there because, we're all,
we will happily speak at their conference. And if they don't have one, we'll create one. So
excellent.
So call us, Hawaii.
Yeah, absolutely. Well, have yourselves a fantastic weekend. Great collection day, and we're really grateful that y'all are listening and adding to the family and the strength of, let's get the word out, because it's we really want to be able to address the things that are the headaches, the pain points, the whatever that you're experiencing. So if there's something too that you would like to see us talk about sometime in the future, don't hesitate to reach out to us, private message, whatever. And we'll get it on the list of our growing list of things that we would like to talk about.
Some really great and fun stuff ahead for us. So we hope you'll stay tuned.
All right. Have a great weekend.